Good morning, sir. I am Laika Marie I. Dominguez, and I will be the first presenter of this presentation. For today's presentation, the Group 6 will be tackling about credit analysis. Credit analysis has 24 subtopics, so each one of the members has 4 topics to discuss. Without further ado, allow me to start with my first topic, which is all about credit analysis. So, what is credit analysis? Credit analysis is the process of determining the ability of a company or person to repay their debt obligations. In other words, it is a process that determines a potential borrower's credit risk or default risk. It incorporates both qualitative and quantitative factors. Credit analysis is used for companies that issue bonds and stocks, as well as for individuals who take out loans. In simple words, credit analysis is associated with a decision to grant credit to a customer. It is also part of a bank's lending procedures for making a loan and monitoring the borrower's credit worthiness. So, credit analysis is used by creditors to determine a corporation's ability to pay back loans, creditors to determine an individual's ability to pay back a loan or mortgage, investors to determine a corporation's financial stability. For example, in the case of bankruptcy, lenders need to assess whether they will be paid back. Similarly, bondholders who lend a company money are also assessing the chances that they will get their loan back. Lastly, stockholders who have the lowest claim priority access the capital structure of a company to determine their chance of being paid. Of course, credit analysis also used on individuals looking to take out a loan or mortgage. Thus, credit analysis is a sine qua non the determination of proper credit rating. Sine qua non is a Latin phrase which means without which not. Sine qua non described as a necessary or indispensable requirement. So moving forward to my second topic, which is entitled Scope of Credit Analysis. Scope of credit analysis is a financial analysis for credit purpose as a complex process. Not only does it involve a thorough study and understanding of financial facts recorded in balance sheets, income statements, trial balances, and separate schedules, but moreover, the economics of a line of business, of a trade, or of industry. Financial analysis is a complete process known as credit checking or credit granting. Credit checking means when a company looks at information from your credit report to understand your financial behavior. For example, a credit analyst working at a bank that issues credit cards may review data about clients who have defaulted on their payments. Default means the failure to repay a debt, including interest or principal, on a loan or security. A default can occur when a borrower is unable to make timely payments, misses payments, or avoids or stops making payments. The analyst might recommend closing the card or reducing credit line. After analyzing the data, analyst might recommend closing the card or reducing the credit line. Credit analysts are not limited to clients who have defaulted in their payments. Credit analysts can also be responsible for potential customers seeking new credit or customers who are being considered for credit line extensions. Without the objective recommendations of credit analysts, banks and insurers would not be able to extend line of credit to businesses or individuals seeking loans for homes, cars, and occasionally employee payrolls as well. A credit analyst is therefore someone who gathers and reviews financial data about loan applicants, including including their payment habits and history, earnings and savings, and spending patterns. The credit analyst then recommends approval or denial of the loan. In addition, credit analyst is someone who finds out the credit worthiness of an entity, either individual or company or countries, depending on the demands of the situation. So, in the case of issuing loans, companies or individual borrowers are appraised to see if they have the ability to service the debt and also if it is safe to give out the loan. On to the next topic will be credit information. Credit information is an information about a person's or company's ability to pay debt, examined especially by banks before they decide to lend money. First things first, sine qua non to any credit analysis is the gathering of all available information about the applicant. Owing to the complexity is the number of facts and data sought. The task of gathering of credit information is far from an easy task. The principal sources of credit information may be observed as follows. So from internal sources, first, debtor's previous credit record with the business firm. Second, creditman's personal knowledge of debtor's character and reputation. Third, personal contacts with debtor. Under personal contacts with debtor is through correspondence. Second, through personal visits by creditman or his representatives. Third, reports of salesman. Analysis of debtors' financial statements. Audits or surveys of the business. So from external sources, first, mercantile agencies. Second, trade references. Third, banks. Fourth, newspaper clippings. Fifth, court cases. Sixth, reports from the competitors of the borrowers in the case of the business firm. Be that as it may, credit information is important because credit reports and credit scores can affect your life in many ways. It is a good idea to keep aware of them. Checking your credit report and credit scores regularly and monitoring them for any changes can help you know how lenders will view your applications and prevent unpleasant surprises. Moving on to my next topic entitled Personal Interview. A personal interview is initially started when a prospective borrower applies for a loan or for the purchase of goods and or services on credit in the case of a business firm. The most prudent credit extension is based upon complete investigation and competent analysis. Each application for a loan requires a different type of investigation. For example, when you are applying for a car loan, in this case, you have to undergo personal interview just as the same when you are applying for a job. The interviewer will ask multiple questions about yourself, your personal interest of applying a car loan, your credit history, credit habits, also if you have defaulted payments or the failure to repay a debt, also including your timely payments, basis payments, payment habits and history, earnings and savings, and spending patterns. It is a must for the interviewer to know all your previous transactions or credit histories in order for them or for their company to know if you are reliable, credit worthiness, or responsible enough to be honored a car loan application. After this thorough investigation, income streams and previous defaults will be analyzed. Moving forward to my last topic entitled Ocular Inspection. So what is ocular inspection? Ocular inspection is an interview with the seeker of credit, may be followed by conducting an ocular inspection of the plant, equipment, and other assets which are offered as collateral security at the place of business of the applicant. So, for example, when you have applied for a car loan and you haven't paid for its monthly or full payment obligations, the company then will go to your respective place and seize or inspect for an equipment, plant, or other assets that can be a deal or offered as a collateral security to your failure to repay the debt. Moreover, title to property may be inspected to determine in whose name the property is registered as well as any annotations, if any, as to past or present mortgages, attachments, and notices of lease pendants. Lease pendants is literally translated from Latin as a suit pending. It is an official public notice that a property has a pending lawsuit or claim attached to it. So that was my last topic for today's presentation. Thank you and have a good day.
Good day, sir. My name is Ale Maria Asinero, and I am here to report about the financial statement. A financial statement may be described as any representation of financial data from accounting records. There are three types of financial statements: the income statement, the balance sheet, and statement of cash flows. These are required financial statements. These three statements are informative tools that traders can use to analyze a company's financial strength and provide a quick picture of company's financial health and underlying value. Financial statement of the individual firm is the most important financial data. Varying numbers of statements, schedules, and exhibits are presented, but there are fundamentals such as the balance sheet, which depicts the financial condition of the business firm at the end of a specified period, the profit and loss statement, which summarizes the financial operations over a period of time, and the reconciliation of the capital accounts and summary changes. In addition to showing the amount of net profit after income taxes retained in the business and amount paid out in dividends, its importance is anchored in pinpointing out changes resulting from evaluation of assets or investments of additional funds. A number of other schedules, exhibits, footnotes, and textual material may be included in the more comprehensive financial statements. Among those found within some degree of frequency are ones giving more details on the audit, the auditor's opinion or statement of the scope of. What is audit? An official inspection of an individual's or organization's accounts, typically by an independent body. What is the purpose of an audit? It is to form a view on whether the information presented in the financial report, taken as a whole, reflects the financial position of the organization at a given date. For example, are details of what is owned and what the organization owes properly recorded in the balance sheet? B. Individual items such as cash and investments, and liabilities such as notes or bonds payable, given as a total in the balance sheet. Insurance coverage. Insurance coverage is the amount of risk or liability that is covered for individual or entity by way of insurance services. Insurance coverage such as auto insurance, life insurance, or more exotic forms, such in whole-in-ones insurance is issued by an insurer in the event unforeseen occurrences. Examples of insurance coverage: long-term disability insurance, life insurance, health insurance, homeowners insurance, automobile insurance, shop for insurance carefully, insurance policy. The bottom line: sources application of funds. This is one of the most useful of all tools available to the credit analysis. Sources of funds are typically trading profits, issues of shares or loan stock, sales of fixed asset, and borrowings. Application are typically trading losses, purchases of fixed assets, dividends paid, and repayment of borrowings. Any balancing figures represent an increase or decrease in working capital. Cost of goods manufactured, selling expenses, administrative expenses, and other income and expense data summarized in the profit and loss statement. 4 is explanatory text of or footnotes by the auditor explaining any of the figures in the financial statement. Reliability: the values of these statements supporting application of loans filed with commercial banks varies directly with the degree of confidence the loan officer can place in the accuracy. Statements prepared outside accounts generally are given more credence than those prepared internally by the borrower's own staff. The reliability principle aims to ensure that all transactions, events, and business activities presented in financial statements is reliable. Information is considered reliable if it can be checked, verified, and reviewed with objective evidence. Interest of commercial banks. Commercial banks are interested in the accuracy and reliability of the various financial statements. Occasionally, banks are presented with financial statements that are not accurate and dependable because they have been deliberately falsified, prepared by those who do not follow acceptable accounting practice, or made by those who are over-optimistic in valuing assets and underestimating liabilities. A commercial bank is a financial institution that accepts deposits, offers checking and savings account services, and makes loans. Analysis of financial statement. Financial statement analysis involves scanning and understanding of an organization's financial situation by reviewing its financial reports. The results can be used to make investment and lending decisions. This review involves identifying the following items or a company's financial statement over a series of reporting periods. Trends. Create trends for key items in the financial statements over multiple time periods to see how the company is performing. The typical trend lines are for revenue, the gross margin, net profits, cash, accounts receivable, and debt. Proportion analysis. An array of ratios are available for discerning the relationship between the size of various accounts in the financial statement. For example, one can calculate a company's quick ratio to estimate its ability to pay its immediate liabilities, or its debt to equity ratio to see if it has taken on too much debt. These analyses are frequently between the revenues and expenses listed on the income statement and the assets, liabilities, and equity can listed in the balance sheet. Who uses the financial statement analysis? First is creditors. Anyone who has lent funds to a company is interested in its ability to pay back the debt, and so will focus on various cash flows measures. Second is the investors. Both current and prospective investors examine financial statements to learn about a company's ability to continue issuing dividends or to generate cash flow or to continue growing at its historical rate depending upon their investment philosophies. Third is management. The company controller prepares an ongoing analysis of the company's financial results, particularly in relation to a number of operational metrics that are not seen by outside entities such as the cost per delivery, cost per distribution channel, profit by product, and so forth. Regulatory authorities. If a company is publicly held, its financial statements are examined by the Securities and Exchange Commission if the company files the United States to see if its statement conform to the various accounting standards and the rules of the SEC. Trade references. As a standard practice, the credit granting and concern generally request the loan applicant that it be furnished with a list of the banks and business firm with which the applicant has business dealings at the moment, as well as those with which it has dealt with in the past. Basically, there are two major reasons which justify the needs for references. First, it is customary for all businessmen to satisfy themselves with respect to the integrity, reputation, and financial standing of prospective customers. Second, trade references showing established business connection during the years past, while not conclusive insofar the business firm will be better situated to face unforeseen emergencies or unexpected business reverses. Funds being readily available could be tapped and utilized for any attractive business opportunities that may crop up in the future. Lastly, purchases can be made in large economic lot sizes. As such, this will enable the business firm to take advantage and obtain some discounts. That's all. Thank you.
Hi, I'm Ashley Ruth Aliasco, and I will be discussing about banks on record, salesman as source of credit information, market research department, and credit agencies. My first topic is about banks on records. Bank records refers to account applications, account statements, wire transfers, signature cards, and other documents evidencing deposits, balances, withdrawals, and other account activities. So, through such records, malalaman ng bangko if magkano na lang yung natitirang balance on deposit ng applicant, and also yung mga cases na involve yung subject applicants, and the degree of promptness of repayment, or kung gaano ka-responsable magbayad yung credit applicant, and many others. So, from the slide, you will see an example of a report of business reference. So the next topic is about salesman as a good source of credit information. So bakit nga ba good source ng credit information ng salesman? First of all, because meron silang direct contact with the buyers within the field of business. So dahil nakakasalamuhan nila yung buyers or the customers, they can be able to hear gossips, so they can also question the customers, and they can have conversations with them, like casual conversations, and by doing such, they can gain informations. So, dahil nga ganon, nakakasalamuhan nila at nakakarinig din sila ng mga feedbacks and other information from the customers, so they can evaluate the value or the importance of the business locations, the methods na ini-employ, and also kung ano yung reputation ng business sa community. So, meron din silang like this quote, which is, "It is better not to make a sale than be able to sell one for which no payment will be ever made by the buyer." So, in Tagalog, or in a language that we can understand clearly, ibig sabihin nun, mas mabuti na walang naibenta kaysa sa may nabenta ka pero hindi ka naman makakatanggap ng payments. Like, meron kasing ganun. For example, through credit or utang, something like that. Tapos, papautangin mo, kaso, yung tao pala na yon na umutang sa'yo, hindi naman maganda yung record or hindi makapagbayad, so lugi ka. And also, salesmen should also understand and remember that no policy would be more detrimental to the interests of the business than to offer special concessions not in consonance with the term of the selling concern. Third topic is about market research department. The market research department is a good source of credit information because it is observed na yung mga taong involved or part ng research department, they have this enjoyment in collecting data or gathering information which is free from bias and prejudice. So, bakit nga ba dapat free from bias and prejudice yung nagiging research? That is for the research to be relevant. Kasi pag it is influenced by bias or bias na yung magiging result, then that research or yung ginawa mong research, walang kwenta na yun. So, yung report nila, they have this distinguished advantage of being free from uncertainty and impersonality, which often times characterize stereotypes or stereotype credit reports. So, ano nga ba ang drawback ng market research department? So, yung drawback niya, or isa sa mga drawbacks niya, is the outlay of putting up the research department and the continuous maintenance, because sa totoo lang, hindi madali yung pagpuput up ng research department, at madami din financially speaking, madami talagang magagastos. My last report or topic is about credit agencies. Credit agencies are companies that gathers and distributes information about credit position of an individual or a company. So there are two types of credit rating agencies. The first one are the agencies that provides credit information with regards to businessmen and businesses or companies and firms. And the second one is the agencies that provide credit information with regards to individual purchasers. So, paano nga ba kumikita ang mga credit agencies? Credit agencies make profits by collecting information and publishing confidential informations or reports for the benefits of their purchasers. So, they can be gained in local newspapers, notices of change in address, death notice, court records, mga ganon. Examples of credit agencies are Equifax, Experian, and TransUnion. The most important facts or reports or informations contained in the reports furnished by the credit agencies is the ones which pertains to the business history of an individual or of a business firm. Yung history na to, it may include bankruptcies, lawsuits, compositions, settlements with creditors, and other favorable and unfavorable data. That would be all. Thank you for listening. I will now pass this on to the next reporter.
Good day, everyone. I am Giselle Ann Sabadokia of BSBA 3E. Today, I will be discussing about the basis of credit under the credit analysis. The foundation upon which the system of credit rests has been indicated earlier. Apropos to that, our attention is immediately drawn to the basis of credit, which are intertwined with credit analysis and evaluation. Basically, there are 5 types of credit, but today, let us focus only to the 4 traditional C's of credit, which is character, capital, capacity, and collateral. To start with, let me define first what is character and the basis of credit. Character refers to the personal integrity of the borrower. So, diri makita iyang determination para mobayad sa iyang gihulam and ma-prove ni siya based on his or her past business record. For example, a business who has paid his bills when due for many years without having any litigations, meaning never nagka-problema o niabot sa point nga aduna nay kasukasong mahitabo with the suppliers. Pasabot ana na ay good character ang borrower. On the other hand, if the borrower has a history of late payments and involved litigations, that is a clear sign that this borrower has lack of character. So ikaw nga hiling magpautang, know the history sa jud para dili magsigig lakag in the end. Let us now proceed to another C in the basis of credit, which is the capacity. This is more on the managerial ability of the borrower. Could he use wisely and efficiently his loan? Factors like responsibility, maturity, business competence of the borrower that determine his capacity to pay. So this basis of credit can be viewed from 2 senses. First is it may look upon as representing the debtor's ability to conduct his business efficiently and profitably. This is reflected by his business experience and personal effort to succeed. In this sense, it has briefly stated that it involves business ability, reputation of product, that is in the case of a manufacturer or producer, and lastly, soundness of business methods as evidenced by profit-making records. Also, the capacity may be looked upon as the ability to enter into valid contract, in which age and health of the debtor are 2 important factors to consider. Why age? Unless if the individual is of legal age, the contract may become invalid and enforceable. For example, if the debtor is only 16 years old, not to discriminate, but we are all aware nga ang teenager, like the age mentioned above, has lesser chance to find good way to make profit because of his age. So unsaon niya og bayad iyang utang if no enough financial support and gain? On the other hand, health is also an important factor to be considered. As the saying says, health is wealth. As observed, uninterrupted earnings depend largely upon one's good health. Alongside, ill health may affect sa iyang ability para mubayad sa iyang utang. So health is wealth because if you are the debtor and is sick, your capacity to pay will surely put at risk. Next is the capital, which is the third type in the traditional C's of credit. This refers to the resources owned by the borrower, such as priorities. With such priorities, the ability of the borrower to obtain credit has become greater. The term capital has many meanings, but in business, money is capital. In economic sense, capital refers to capital goods, goods that are used in the further production of more goods. That money nga imong gibutang sa pagsugod sa imong negosyo gitawag nga capital. And this could be a good way sa pagpakita sa usa ka nagpahulam kung unsa ka kaseryoso bahin sa imong business. It is not that you can use 100% to what you lend in the beginning. That is why aron makakuha usa ka sa loan, kinahanglan nimo nga maghimo sa og investment sa imong negosyo. This may come from deposits or money from other sources. And the last piece of credit is the collateral. Collateral Collateral can help a borrower secure loans. It gives the lender the assurance that if the borrower defaults on the loan, the lender can get something back by repossessing the collateral. The collateral is often the object one is borrowing the money for. Auto loans, or for instance, are secured by cars, and mortgages are secured by homes. When evaluating a loan application, a lender will generally look at collateral as a secondary source of repayment for the loan. Gusto nila nga masiguro nga kung ang pagbayad sa utang muhunong tungod sa usa ka rason, mabawi nila ang ilang utang pinaagi sa collateral. It could be vehicles or inventory. Ang kantidad sa gapautang i-base sa percent sa kantidad sa collateral nga gitawag nga loan to value ratio. Ang lain-laing klase sa collateral adunay lain-laing loan to value ratios. That ends my discussion for the basis of credit. For questions and clarifications, kindly message me on my personal account, or you may call and text at my phone number 0997 5767993. Thank you and God bless everyone.
Hi, sir. I am Apple Jane Echator, and I am one of the reporters. So, preventing frauds on collateral. In order to prevent the commission of frauds, insofar as the use of collateral is concerned, it is necessary that a central collateral register be provided and maintained. This should provide complete and accurate description of all collateral pledged or deposited with the institution. Negotiable collateral should be held under joint custody. So, meaning ani, kailangan na maghatag sila og sakto na description sa tanang mga collateral na ginasaad or ginadeposito sa isa ka institusyon. A designed employee or officer should inspect the collateral and all related documents. Collaterals should be appraised conservatively to avoid overappraisal. Ang usa ka employee nga na-assign ana na job is in need niya nga i-double check ang mga documents aron nga malikayan niya ang trouble sa pagtransact. So, let's proceed. Other bases. Within recent years, many economists and financial experts include other C's of credit part from the traditional ones, which were mentioned and discussed in the foregoing paragraphs. Excuse me. They are conditions and country. When business starts from bad to worse, sometimes it happens that even those debtors who have shown exceptional business ability and the reputation for discharging their obligations on time become delinquent, if not to say default in such obligations. That being the case, any prospective creditor becomes wary in extending credit during slack periods. Conversely, during periods of business boom, if not to say periods termed by economists as one of prosperity, creditors are quite liberal in the grant of loans since most businessmen are making good in their businesses, which ensure their ability to meet their financial obligations even before their due date. So let's proceed to country. As had been stated time and again, the sale of goods and services in any part of the world on credit involves risk. It follows that every factor should be carefully considered and scrutinized insofar as they affect credit risk. Ang utang is part na sa atong life cycle, but sometimes makautang ta pero we cannot pay it during sa due date or sa term niya. That's why if magutang ta, dapat natong sisiyon if unsay mga dako nga impact ani sa tua, if the result is good or not. So, in the field of international trade, exporters who sell their goods on credit are exposed to certain credit risk, notwithstanding the fact that their importers have for years been very religious in the discharge of their obligations. So let's proceed to banks' credit rating system. It is logical to expect that the training rating system of bank may differ from the others insofar as its requirements are concerned. However, their objectives are more or less the same, such as 1. To define the relevant areas of credit and serve as a medium for credit analysis and the determination of credit worthiness. 2. To provide the bank of uniform stick for credit in evaluating all customers intending to avail of its services. And 3. To rank objectively borrowers as well as prospective clients based on established risk rating scale and accordingly grade the bank's investment portfolio in accordance with various level of credit worthiness. And 4. To standardize the steps and procedures to be followed in the credit rating process. So, let's proceed to currency. It is not only the stability of the country of importation an important factor to reckon with the consideration of credit risk in the international trade transaction, but equally so it is that which pertains to the currency of the rest of exchanging must also be taken into account, where the currency of a country fluctuates quite markedly from time to time. Such circumstances may prevent the grant of credit to the prospective buyer or importer to the goods. For ended, it could happen that at a time of payment of the obligations, the money paid to the exporter is not worth as much as it is used to be when the contract of sale was perfected.
Hello guys, hello sir. My name is Raymond D. Poblete. I'll be the last reporter in this group. My topics are all about alternative approaches to credit rating. Second topic was cash flow evaluation. The third topic was handling credit investigation. And the last topic I'm going to report is credit investigation report. First, the alternative approaches to credit rating. When you say alternative approaches, sa Bisaya pa murag laing pamaagi, o sa Tagalog alternatibong pamamaraan. The approaches have two types of approach. These are inward approach and outward approach. The inward approach, this type of approach emphasizes a firm's financial performance and its asset position as of its specified date. And the outward approach, the use of upward approach lays on emphasis in industry conditions, plans and forecasts and general outlook. The difference between these two approaches are the inward approach focuses on financial performance and asset position in a firm, while outward approach focuses on the industry conditions, plans, forecasts, and general outlook. Next, cash flow evaluation. Cash flow, from the word cash flow, you are familiar with this, and cash flow is the inflow and outflow of cash. Cash flow evaluation refers to the analysis of projected sources and application of funds to determine the available cash to meet future obligations and contingencies of the subject business firm requesting a loan or increase in its credit facility. Cash flow evaluation, kay importante siya sa kumpanya kay mauna ang siya ga-evaluate sa cash flow o outflow sa kumpanya kung naapay mabilin na cash sa company for future obligation. For example, kung sa isang company kailangan cash flow evaluation, kailangan sa ma-evaluate ang cash flow kay pananglitan ang kwartong napay manabiling kwartan napay magamit sa future na obligation. Kung wala na yung mabilin na kwarta, pwede na lang dahil mag-loan. Sa mo na ang importante ang cash flow evaluation kay mo sa ka-projected sa cash flow sa company. My next topic is handling credit investigations. For a bank to protect its interest, it is highly essential that proper and credit investigation of credit of every purposed borrower be undertaken to determine the justification behind a loan. It is thus important that the banker in investigating a possible customer as well as in the checking up an old borrower should exercise much discretion and act in order to avoid offending the client. In the handling credit investigation, importante gud ni siya na ma-investigate yun di mo kung sakto ang usa ka borrower kung para dili siya ma-offend masako sa imo. From the word handling, imong say handle og maayo kay for example masayop ka og na handle sa pag-credit investigation nakaisip gamay na maong anabotang nimo sa iyang credit investigation report na pangit yang agi niya sa iyang pag-loan. Masako ang client kay lahi imong gibutang sa iyang sa report. As a credit investigator, magtarong kita handle sa pag-credit investigation. My last topic is all about credit investigation report. This credit investigation report is muna ang mga result sa mga credit investigation. All essential facts gathered by the credit investigator regarding a particular or business entity are summarized in a formal report known as the credit investigation report. This report prepared in two to four copies depending on the nature of the request. Usually contains the following information: the brief biographical sketch of the borrower, if an individual business history, if a business firm, a breakdown on the capitalization structure of the firm, a presentation of the latest audited financial statement in a condensed form, a listing of the management principles of the business firm, a credit responsibility reported by other creditors, trade suppliers, and other banks, court cases and legislation per Credit Management Association of the Philippines records. The report is reviewed by the supervisor of the credit investigation and the appraisal section, and copies are usually distributed as follows: original requesting department, the duplicate loans administration department, and the triplicate to the credit research and the information department file. So, kung mag-loan gid daw, tigit siya gid mag-loan kay dahang kay mag-investigate. Okay. Once na mag-loan ka, sa dapat nindot gid imong credit, imong report, ay imong agi. Okay. Once na mag-credit investigation ka, pasa-pasa iatag pa na sa supervisor and the appraisal section para ma-approve ang imong loan. Tekan pa yung pumaagi. So, importante gid kayo ang credit investigation report. Kaya nadatiran ang mga report sa pangsulat sa mga credit investigator about sa borrower or the loan. And thank you guys, and thank you sir for listening for my report. Thank you and good morning.